Sean Haney and Justin Funk here with Real Agri Studies. Looking forward to today's video. What we're doing today is we're looking at the results of the January 2024 Canadian Farmer Sentiment Index. The idea here is that we asked you, the Canadian farmer and rancher, how you're feeling about the market today, going forward. How does it reflect on your farm profitability? Things like mental health as well. So lots of stuff to discuss here. We had just under 550 respondents from across the country, which is really exciting. Thank you to everybody out there. Looking forward to digging into some of the data here with my colleague Justin Funk. So Justin, let's get into it because there's a lot of stuff to unpack here.
Yeah, you bet. So for some of you, this may have been your first time completing this survey. So just very quickly, we want to make sure that you understand how to interpret the results that you're going to see here. So in the survey, you would have been asked a number of questions related to how you feel on certain things. And there would have been a positive response and a negative response, and in some cases, a neutral response. So what we end up doing is we end up subtracting the negative responses from the positive responses to create this differential, which now allows us to look at the index or the gap being as either positive or negative. And so just I want to share with you here, we had 546 farmers complete the survey. That means that we can look at these results within plus or minus 5% degree of accuracy, which means it's pretty representative of the industry. So here's an example of a question that we would have asked. This is one of the earlier ones. Would you say your operation today is financially better off, worse off, or about the same? And so here you can see that there's the positive response, which is better off. And then we subtract the worse off, which is 35%, and that creates a differential of negative 14.3. Well, you add that to 100, that creates now a negative index of 85.7. So this is an actual result that we've been tracking now over time, and that gives you an idea of how we got to that number. Okay, so Sean, in a minute, we're going to walk through these results, but in this study, we actually adopted a slightly different approach. Usually this is the first question we ask people, but given that it was the beginning of the year, we asked a question about risk. And I want to share this with respondents because this is the first question people would have asked. And I think that just the responses here kind of give us a sense as to how farmers are feeling going overall into the 2024 year. So the question was, when it comes to the coming crop year versus last year, do you feel that there is more risk, less risk, or about the same amount of risk? And as you can see here, 3/4 of farmers feel that there's more risk, which I don't think is surprising, but I do think that it kind of gives us an idea of the general state of mind going into this year.
Yeah, and I think there's on top of that more risk, there's different levels of severity of more risk, right? Is it incrementally more risk, or are we talking like double, triple, quad kinds of more risk? I think the things that are weighing in on farmers, really, when you talk to them, is the fact that commodity prices on the grain and oilseed side have pulled back from the highs. We've seen that trend continue. We've sloughed downwards, and input prices have come down, but farmers would like to see them come down even more so from an input perspective. And of course, in certain parts of the country, like in Western Canada, the drought risk is still very, very real. So I agree with you. Not super surprising. That 1% less risky. That's an interesting one. I wonder what some of the things that those farmers are facing that they have lessened the risk. Maybe they paid off some debt. Things like that. Everybody can look at this a little bit differently, but yeah, definitely more risky in 2024.
Yeah. So let's take a look at the CFSI index numbers for January. And to do this, we're going to be comparing it to the previous ones that we have done so that you can see the changes that have occurred. But as we mentioned earlier, in terms of how we get to these numbers, 100 now represents the neutral line. So anything that appears above this would be a positive sentiment. Anything below this neutral line would be a negative sentiment. So in looking at our first question, which is on the current farm financial performance. You can see the trend here, and this takes us up to October of 23. Now we add in January, and you can see that the number pretty much continues on a pretty steady decline. You know, it had been shooting up there earlier in last year, but it's been on a decline pretty much ever since.
Yeah, basically since July,
Yeah.
right? It's since so no, actually no, even before that, May.
Yeah.
Basically since May, it has been on the decline where farmers feel their current farm financial performance is worse than 12 months ago,
Mhm.
right? So that but hey, that's this is also the direction the markets have gone. So, you know, if we were to overlay the December corn chart, you'd see the same direction, right? So those are very much tied together.
Now we ask about the future. You can see that this one has always been in the negative. And I think that we've talked about this before, that whenever you're looking out into the future, you're probably going to be somewhat cautious. So you don't want to be too optimistic, but you can see this one's kind of bumped around a little bit. But in the latest, the January results here, we see that this number has gone down again. And so it'll be interesting to see when we do this in April if that trend continues, or are we looking at sort of a little bit of a wave here? I'm not sure.
Yeah, this one not a great result. I think kind of concerning that as we're seeing the decline in how farmers feel about their current farm financial performance, when we look out 12 months, people saying it's going to be worse. And listen, throughout this, people have felt more negatively about their future farm financial performance than their current. And we've talked about that convergence. We have a chart in a little bit here that's going to really showcase some of that convergence in a line format. But this shows that there's some trouble when it comes to farm profitability out there in rural Canada when people look at all these variables. We'll look at some of the east-west data. There's probably some drought overhang here and some uncertainty about what how much crop can actually be grown in 24 in some of the provinces like Alberta and Saskatchewan for the most part. But I think 67 out of 200 is a pretty concerning number when we talk about the future farm financial performance.
Yeah. Well, and it's the lowest it's ever been too.
True as
Yeah.
well. And then we've got a few record lows coming up here, just not to
Yeah.
spoil
Well,
the some of the results, but
and I hate to say it, here's one right here. So when we ask about the optimism towards the Canadian ag economy, are we going to see financially, good times or financially not good times? You can see that in, the last two studies, July and October, there was pretty much no change, but things really, really dropped off in this January sentiment. And so I think this is probably the one that that we're most concerned about. And I'm just going to flip ahead here real quick to looking at the next 5 years of the Canadian egg industry. So this is not necessarily related to the economy, but just the industry as a whole. You can see this one has sort of bounced around a little bit too, but even in this latest edition, we've seen it normalize perhaps and go even further down than and at the lowest point that it's been.
yeah. And I don't want to be try to be overly negative here, but I think the result is pretty negative. Farmers not, you compare January of 2024 to January of 2023. Those highs that we're seeing in these first four categories, well, except for future, but for the other three, it's January of 23, right? So
Mhm.
we are much more negative in January of 24 than we were a year ago. Okay, and obviously a lot has happened in those 12 months. But I have a little bit. We left an open box for people to answer. Just hey, let us have it. Tell us what you're thinking, right? And I love those open boxes because you get a whole variety of stuff. There is a political overhang here. If you look, and I didn't do percentages, but if you look through the open commentary, a lot of people's negativity, which, future of Canadian ag industry in the next 5 years, we're looking out 5 years. That's a long time. You can be way too bullish or, maybe we're being way too bearish. But a lot of the commentary is about policies related to the federal government. and how people feel what the federal government is doing is impacting their farm business. Of course, the carbon tax comes up a lot. There's been a lot of talk about 234, which is the exemption on the carbon tax. So, uh, and some of that is exceptionally real, and you're writing a check like you are for the carbon tax when you see it as a line item on an invoice. But some of it is just disagreeing with the politics of the current government. So, but all of that notwithstanding, farmers feeling pretty negative, not just about the next 12 months, but about the next 5 years,
Mhm.
which I hope we can see a reversal of that, and things change here as we progress in 24.
Well, and I think what we're seeing too are the implications of this sentiment. The next question that we look at is the confidence in making farm investments. And just a little context here, when we asked this question for the first time in September of 2022, this was right on the cusp of an interest rate announcement. Interest rates started to go up, and we saw the sentiment go down, but the sentiment has pretty much normalized here,
Yeah.
even despite the fact that interest rates now have remained steady for the past little while. So this is where I think we're going to start seeing an impact, and it's going to start affecting other people in the industry, like equipment sales and things like that. So, which I think we are at this point.
So I got an email when we did the November, or sorry, October, the last CFSI, and somebody said, and I'm paraphrasing here because I don't have it printed out, but basically saying like, farmers clearly are negative about the future, but that confidence in making farm investments hasn't really moved. It's negative, but as negativity has increased, so to speak, it hasn't reflected in people's confidence in making farm investments. And if you look at the price of land, that really, like, the transactions have slowed, but the values haven't, right? And so is there a bit of a disconnect there? And I think it's a viable question. In October we had asked farmers about, were you intending to buy land in the 23-24 crop seasons? And we saw it was younger, larger farms that were going to be doing that. Over the next several weeks, we're going to be putting up a bunch of stories on realagriculture.com, digging into some of the demographics on who is saying what. But that confidence in making farm investments, it's just been pretty inelastic.
Well, looking at the next set of questions now that really relate to the farmer's ability to earn revenue, confidence in marketing crops is going down. And you can see that this one had been trending down and then up a little bit and then now down again. And looking at that relative to people's whether they feel it's a good time now to be selling their crop due to commodity prices, you can see that this one really, really rode quite a significant wave, going from high to really low to way back up high again, and now it's sort of normalized a little bit here. So I think that this is likely also having an impact on the previous question.
Yeah, and the the group of bars on the right, direction of what you feel the direction of the market is. On the left, when it comes to confidence in marketing crops, this is the one that no matter which way you think the market's going, up or down or sideways, having a viable plan to steer through that, which you've already said is the more risky environments. We've said we've got more risk out there. Was it 75% of people said the current environment is more risky on the 24 crop? Yet our confidence in steering, marketing our crops through that is actually going down. It's now an all-time low. That to me is concerning, right? Whether the market's going up or the market's going down, having confidence in your plan is a real key. So farmers are seeing risk, and their confidence regarding how to deal with that, especially from a crop marketing standpoint, is on the decline. So that's a bit of a red flag for me.
Yeah. Now, despite all of this, when we take a look at mental health, which we ask, is your mental health in a better position or a worse position? or about the same as it was 12 months ago. You can see here, this one just really hasn't moved a whole lot. So, look at this in context. I think that this is a positive, despite all the negativity that we see happening on this chart. You get to the mental health question, and we see it remaining relatively flat. And it's near that neutral line, which I think is a good place to be. I think that that's somewhat reassuring. And I know that we look at this and maybe wonder, well, why do we keep asking it if we don't see the fluctuations, if it doesn't change? In those open-ended, there was a response that said, "Thanks for checking in on us farmers." And you know what? I think it's really important that we do ask this question because this part of the farmer's voice is just as important as how they feel about making investments or the economy or the government for that matter.
Yeah, just like confidence in making farm investments, state of mental health is it's a pretty flat road. It's like a road through Saskatchewan, right? Where and if you look at the roller coaster that our outlook on selling crops in terms of the direction of the market has been on, yet state of mental health is laid flat. Yeah, it's either there's those two aren't as connected as maybe we would think there would be, or farmers are doing what they need to do to make sure that they keep on the even keel, right? So I agree with you. It is positive.
So this is a look at the aggregated results. Up until this point, we haven't really gone too much deeper in the analysis on these videos, but this time we thought it might be interesting to dig into the relationships a little bit by looking at type of farm and also geography. So I'm just going to flip the screen here, and what we're looking at here are the January results, but by farm type. So, if we're looking at farmers that are primarily crops, primarily livestock, or both crops and livestock, you can see that there's quite a bit of variation that exists here. Like for instance, both crops and livestock farmers seem to be a little bit more, I guess, have a positive sentiment, albeit still negative on their current financial performance. Maybe that's because they're spreading their risk a little bit. When we take a look at primarily livestock, they feel pretty good about their future financial performance. So, in looking at these, we can call out a number. I would call these significant findings where the relationships that exist are, different enough that we are called to their attention. So I know that you haven't really had too much time to dig into this, Sean, but when you look at the results here, are there any key takeaways when you look at type
Yeah,
of farm?
I think so. You look at current farm financial performance of the livestock sector. Yeah, pork's been really bad as of late. Feeding cattle has been negative margin, and the ranchers dealing with drought. And remember, the majority of our livestock answers here are from the beef sector, and so that's how I explain that. But so okay, so why does the primary livestock feel better about their future than their current? And that's because of where the prices are,
Mm.
right? And so for the beef producer, the rancher that is in our audience, if they can get some rain and make some grass, there's some opportunity there out there to make some money for sure. Why primary livestock is so negative when it comes to the next 12 months in terms of the Canadian ag economy, I don't have an answer for that. But you look at the next 5 years, the mixed farmer feeling still relatively pretty negative at 70
Mhm.
on future of Canadian ag industry, but feeling much more optimistic than their other peers. What's interesting is that the livestock producer feels pretty neutral, much better than their peers when it comes to their future farm financial performance. But if you look at the next 5 years, they're the lowest.
Mhm. Mhm.
Those are kind of disconnected. Do they not think it's gonna commodity prices are going to stay low from a feed cost perspective? Do they not think that we're going to get sustained moisture over the next 5 years, or what is it that's forced that 37 on the future of Canadian ag industry for primary livestock? Confidence in making, future of Canadian ag industry. which is the
Yeah.
next 5 year question. I'm not too sure about that.
Well, so in looking at that, you'll notice that we have on this chart here the confidence in marketing crops and the outlook on selling crops. Well, if you have livestock, you would have been asked that in the survey, and then it would have taken you to another set of questions where
Yeah.
we ask you about your confidence in marketing your livestock, and also your outlook on selling. So same questions as the grain, just phrased now with respect to livestock sales. And I think that this is interesting that these were the only responses that were positive, pretty much in the entire thing. You can see where if I flip back, everything's below that 100 line, but you ask about
Yeah.
confidence in marketing your livestock, there's a positive sentiment there. And also the outlook on selling livestock, like are prices going higher or prices going lower, extremely positive, I think, on that particular one.
Yeah. But prices are up. There's no question about it. So, this is the reverse of what we've been seeing in the grain markets. But hey, from an economic standpoint, the beef producer in particular, they need the consumer to continue to come through so these prices can be sustained, right? If demand shrinks or is cut, then or the export market faces some deterioration, then this changes very, very quickly. But right now, I would tend to agree. If I had answered the survey, I think this graph totally fits with what I would expect would be out there.
Mhm. Well, I don't know about you. I'm doing my part. I like buying meat and
There you go.
yeah. So okay. Now the next set of questions here look at it from a geographical standpoint. And here, looking at it from east to west, you can see there's a very, very clear observation. You should see it already.
Yeah.
Um, there, other than maybe this one and yeah, there's not a whole lot of variation. The outlook on selling crops, and I mean, even there, it's not enormously different.
Right.
And that one would make sense because you're looking at different types of crops. Everything
And
else is
drought.
pretty
And
generic
there's
and
a
drought. Yeah.
yeah, there's a shortage supply, probably a little bit more upside. So I
Mhm.
do think that kind of makes some sense. Yeah, I love this. Okay. I actually love the fact that the East and West numbers are similar because this is one of those examples where they're not different, but it actually tells more of a story from the standpoint of there's a lot of perception out there in farm country that the grass is greener on the other side of the fence, so to speak. So I'll hear from Western Canadian farmers, oh, those guys out in the East got it so easy. And then I'll hear from when I'm going to be in Cambridge, Ontario this week speaking at an event, and I'm going to hear, out West, it's just, there's a lot of things to feel fortunate about out there. Like people have this perception that things are, that they're the ones fighting the bad variables, and it's everybody else that has it a little bit more easy. This shows that the Canadian Shield is not as much of a separator sometimes that we pretend to make it out to be, and there's not as many differences east to west as some people try to make it out to be all the time.
Yeah, yeah. It was as soon as I saw this, I thought it was fascinating. In other surveys that we've done, we've seen some differences in east to west, but this, I mean, I can't really say confidently, other than the outlook on selling crops, that there's anything different. Okay, so we're going to show a new chart, a new look at data. So remember, we are basing this study off the Purdue Ag Economy Barometer, which is done in the United States, and we're going to be doing some more comparisons to Purdue as we work with them to show the differences across borders. At Purdue, what they do is they produce an index which shows us both current conditions and future conditions. And so just so you know how I generated this chart, you take the average sentiment of any questions related to the current situation, current farm financial performance, and the current state of the ag economy would be the two there. And then the future would be future farm financial performance and the future of the ag industry. And when you put those together, you can see the gaps that exist in the sentiment from a current standpoint versus a future standpoint. And really, as you move through the data, there's been quite a bit of a separation. But then when you get to October of 23, you see the convergence, and you actually start to see, a little bit even of an overlap there on the future compared to the current, but then it starts separating again as it trends down. So this is really our first look at this data, showing it over that time frame, and we're going to continue to expand this out just to show how the mindset is thinking current and future across this timeline.
Yeah. And what we've been talking about here is people feeling better about the current than the future, and they have diverged on each other. They've come together. In October, they did come together basically,
Mm-hmm.
and now they've rolled over together. So
Mm-hmm.
it was like and I was terrible at geometry, but you had this triangle coming together at the apex, and now it's just sort of gone. It's sort of it's dipped over together too. Here's what's you mentioned the ag barometer. Okay, so we're dealing with what, a 65 and a 62. The ag barometer is at 115 and 112, and that's for December. Okay, that's not. This is, and we're looking at January, but the that tells me the American producer feels a lot better about their current situation and their future situation than the Canadian farmer. Correct?
Yes. Yeah.
Yeah, which is a bit of a bit of a mystery to me. Um, this is where my political theory, right? Um, a lot of U.S. farmers aren't voting for the current administration in the U.S. So why, cancel those out? The question is why? Canadian farmer feeling much worse about their situation right now than their peers to the south. So I'm really hoping we do this in April, that whatever the variable is really driving this, find some sort of a reversal, and we can prop ourselves back up, because we don't want to see this number, this continue to slough downwards.
No, absolutely not. Um, just one more chart here before we wrap this up. This doesn't really tell us anything. We've already seen this, but this is the Farm Investment Index, which Purdue is also doing, and just tracking that number from a different visual standpoint, willingness to make farm investments. And so we're no real point in talking about this right now because we already looked at it, but we're going to continue to monitor this. But I think the conclusion here is where oftentimes you see, a lot of peaks and valleys. Well, this is this is the road through Saskatchewan, so to speak. This is this is relatively flat, and who knows? Maybe if something significant changes, we'll see a spike in this one. But right now, not looking like there's any spikes on this particular slide.
Yeah. So, and if you say that, well, interest rates going up are a factor here, it looks like if you were cheering for rate cuts in the first quarter, that's likely not to happen at this point after the past couple of weeks of commentary from the Bank of Canada and the Federal Reserve. But there are still expectations of rate cuts in the year ahead. And what we've continued to see, and we'll dig into the demographic data, but what we have been seeing is younger and larger, younger farmers and farmers over 5 million in income. They are willing to invest much more than their other counterparts. So it's the farmers outside of those demographics that are driving this number lower. Consequentially, as well, if you want to continue to compare it to the ag barometer in the U.S., Canada's number's higher. We're at a 50 and they're at a 43 on investment. So even though Canadians are much more negative, they're a little bit more willing to make capital investments at this time. So take that for what it's worth. So this is, I hate to use the word interesting, but I think right now, as we look at these numbers from January of 24, there's a lot of interesting stuff to unpack here going forward, as we're going to be publishing stories on a weekly basis on RealAgriculture.com, doing some more of these kinds of videos, Justin, and really digging into some of the nuance and some of those, not just trying to stay, what we've heard from you, the audience, is that you've supplied us with the 100,000 feet stuff. What about, some of the digging into some of the nooks and crannies of some of this data? And we're going to be doing that over the next number of weeks.
Yeah, you bet. So thank you to all of the panelists who completed the survey. We can't do this without your cooperation. I looked at the timing, and this one took only about 5 minutes to complete. So, and there were a few other questions in there on business risk management, which we'll be coming back to you with
Yep.
here in the short while. But no, thank you for the commitment to this project. Please keep filling out our surveys when we send them out, because we're bringing this information back to you and sharing it, through the Real Ag channel, to make sure that those that need to hear it get to hear it. Really directly from you through us.
Yep. Awesome stuff. Really, really appreciate it. If you have any additional questions, you can send us an email, shaney@realagriculture.com, or of course, you can always go to realagristudies.com to keep up to date on some of the information we've got coming out here. Watch this video again, or do whatever you need to do, or make some suggestions. So until next time, thanks a lot, everybody. All the best to you. Cheers.